Come a little bit later on because Prime Biz begins right now with Francis and the number of the day.
Thanks, Peter. The number of the day relates to the Zimbabwe Stock Exchange. Let's bring it up, -7.5%. The industrial index on the exchange fell by this percentage today after months of incredible gains. Now, this, of course, a day after a military coup was confirmed, and while the President Robert Mugabe remained under house arrest, he has been allowed to move around, we heard earlier, but he is reportedly refusing to negotiate a settlement that will lead to his exit. Now, the Zimbabwe Stock Exchange is interesting because losses do not mean that investors are concerned or distressed. This is actually seen by most as a sign of renewed confidence in the Zimbabwean economy. I'll tell you why. The economy is so dysfunctional that the deeper it has sunk, the more stocks have soared on the exchange. And this index that we're talking about had in fact soared by more than 260% this year. Zimbabweans have been buying Bitcoin and stocks as some sort of protection against inflation and a lack of cash. The inflation spurred on by the government's decision to print a new form of money called bond notes to deal with the lack of dollars. So many stocks have been inflated and the market may be in bubble territory. The fact that investors are selling today means they believe some degree of normalcy could return, and then it's no longer worth overpaying for those stocks. Well, let's speak to an economist now to discuss. We're joined by Zimbabwean author and economist John Robertson. Mr. Robertson, do you agree that these losses on the market today are a sign of investors feeling pretty good, actually?